Markets closed at all-time highs once again as strong sectors extend and commodities continue to get sold. All eyes will be on Big Ben come Wednesday. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. And of course, everyone will be wondering this week if this rally that we've seen can continue. Scott's been talking about this S&P road to 1700 for quite some time now, and it looks like it's happening even quicker than anyone could have expected. And there's a lot of tradable pivots that we saw along the way that we could have used to take a little risk off, but still stay with the rally.
Yes, as an intermediate trend follower, which tends to be my sweet spot, you always want to judge inflection points. And although we've talked about the road to 1700 for the past year or so, you had to navigate it. And when we started this year, a lot of naysayers are out there, a lot of people calling that the Fed's going to taper off, that Europe's still going to implode, that the market after last year's gains was too much. But every time we've met one of these pivot points, the market acted very well. So it was much more important to actually measure the commitment and the composure of the pivot level versus using opinions on how much further the market can't go or can go.
Right. Show us some of those pivots that you're talking about.
Okay, so if you take a look here, at the SPX. So, we define pivots in technical land as levels that you need to watch to overcome. So last year, you remember 1474, that was the 2012 high. So 1474 in our 2013 thesis was very important. So this is when we started the year. You had a big igniting two-day move that got digested. So the question was, if we get above 1474, last year's pivot, we could probably get to 1500 plus. So here on this day, we got above 1474 and we went to 1500 plus. So this high here was 1530. So that was your next pivot. From there, we had a brief correction spurred by the Italian elections or whatnot, where we lost the 8-day, the 21-day, but held above the 50-day. But what happened? We snapped off it, held higher, and then if you took off some risk here, this was a spot to put some back on, and then 1530 was your adjustment point. If you even got short here, okay, this was your spot to say, okay, if it gets above 1530, it can go higher. So on this date, it blasted above 1530, went as high as 1543, and continued. Then we rode the 8 and the 21-day all the way up to right around here, which was another pivot. This was 1573 after holding the 21-day, and this was your decision point. Some guys who've been rolling up the shorts all year might have used this price point to cover some, or some who might have been missing the rally say, oh, now I'm going to jump in now. So PS, you had a quick move up. Okay, that this was, the first, I thought, negative pattern that could have amounted to some kind of correction. But we went through it, came back below it, held the 50-day, and then reclaimed it right away. So right here, you could have taken off your short hat, you could have taken off your opinionated hat and said, okay, I'm going to look for longs again, or at least cover your short. Then we went up, back, consolidated near the highs. This was that recent high, 1597. That's why it's another pivot. Got through it right here. So if you were short, this was your last decision spot. If you were looking to add to longs, here was a nice move. Boom. Then we basically flagged again, and then we went through 1636, and here we are, at 1667. So along the way, this year alone, there were many spots to adjust position size, amount of positions, adjust whether you had short in the brain, and made some money, along the way. Right,
but as you said, that is for just this year alone. So what can we learn if we went back even further?
Well, part of the road to 1700 was based on, the 3 decades. Everyone, historically back in the day when you'd go sit down with, a big-time fund manager, they would show you, the last 30 years of historical data. This is what you could look for potentially in the next 30 years. And then everyone kind of forgot that. Right, because last year you had the decade of pain, the decade of timing the market, those descending and ascending channels that amounted to nothing. But what they really did is they digested, the roaring 80s and the go-go 90s, and that's why if you look at this chart and on a big-time macro level, you go to the monthly chart. I talked about the road to 1700 because here was, your big move in the 80s, and then here was another huge move in the 90s, and then this was your decade of consolidation, the decade of having to make adjustments on an intermediate time frame. And then recently, this was that big low after the financial crisis. You had a higher low. which is constructive, another higher low constructive, another higher low constructive, another one. And then my thesis was if we take out 1550 to 1570, this double top that controlled the decade, no reason why we can't get to 1700, but I didn't think it would happen perhaps before July 4th.
I don't think anybody did. But talking about tradable setups within the market, last week we talked a lot about tradable setups within the banks, but you always talk about knowing your time frame being the key to finding those setups within this market.
Yes, so you can have a macro thesis and have some type of macro account, whether it's a 401k, an IRA, whatever it is, or even something for your college education. And then you could also have an intermediate thesis, which is something that I tend to talk about a lot, the portfolio approach, where you hold multiple positions through a range as long as the range is following the 8 and 21 day, and you do add on tiers or breakouts, whatever. And then there are those who don't feel comfortable holding stocks, which is also cool, the more active cash flow approach, and that those who need to generate P&L, they have to find these type of setups. So last week we had some of those setups just real quickly. We talked about Goldman Sachs. We talked about this descending channel. This was a nice tradable setup above 151. JP Morgan, another nice tradable setup above 50, 51 right here. So these are the type of setups that we've been getting in the leading sectors. So now the question here, Brittany, is if some of these leading sectors are extended, can we find some of these setups in some of the laggard sectors?
Right, and that's what we're going to do. We're going to talk all about finding tradable spots within the market. First, some setups that are poised to break out on an intermediate basis, and you actually think Stanley Black & Decker is one of them.
Yeah, this one is not a name that I normally look at, but if you look at it, it's approaching highs. You go to the chart here, could be something to do. You take a look. This level for this stock is around 82. It just came from the 200-day, so I would say the longer it stays above, let me see this area, the 8-day, and goes sideways at some point, could be this week or later, it should trade above 82 or could trade above 82, and that could be a buyable spot.
And Praxair as well. This one showed relative strength on Friday. It broke above the downward trend line that had been in place and was flagging above all key moving averages.
Yes, this is another one that, these breakouts have been working more in the leading sectors, but I wouldn't say this is a lagging sector. It's just taking its time to get there. So if you look at PX here, something I don't ordinarily watch, had a nice move on Friday, right back near these highs. So I would say through 116, 50, 116.80 with some volume, maybe you get a cash flow trade there as well.
And also a stock like Corning saw relative strength on Friday. Actually has gained 18% within a month, but still has a chance to go higher. Wow.
Yeah, this one, actually our editor-in-chief, John Darcy, has been talking about it for, 3 to 6 months, I think, maybe even more, about the Corning glass, and we mailed around the video showing how cool it was. If you look at the chart here, it's look at this breakout. And granted, it's coming from lower levels, but you go here, you go across, this 1370 was a huge level, and now you take even a closer look. Wow, this is, this is not a tight spot, so as far as an active trader approach right here, I wouldn't take it, but overall, this has been a really nice move. This is one of the setups we talk about in our swing trading class. When you get a gap above a key level, that could ignite a move. And look at this, boom into a bull flag, and it continued. And I guess let's just take a look at where the next resistance comes in. And your next resistance doesn't come all the way in on this one until it's broken through this one. Yeah, this could see about 19 bucks this year, but I would say it's a little hard to enter after this strong move, but something to stay with.
And there are also some setups that are poised to break out on a short-term basis, like FMC, which had a nice micro breakout on May 14th, but could get another one soon.
Yes, this one, all these things just keep continuing higher. So that's the frustration. It's so hard to find something that still hasn't gone yet. And if something hasn't gone yet in this market, you're like, why not? There must be something wrong. But this one has gone. It's just not at 2013 highs. You look at the chart here of this stock, and you will see, nice wide range bar. It's coming into another level. So with that said, if it were to clear it with my nice little line here, so I can give you a clear visual, there could be more. But actually, this just hung out here for 3-4 days. So I would say a trade through Friday's high of 63.36, and chances are you get a little bit more of an extension as this little stair step continues.
And Precision Castparts is another one poised to possibly break out on a short-term basis. This one saw a nice gap up on earnings and is flagging above all key moving averages.
Yep, and this is precisionally working high. I got to throw a red before in there. It's Monday. So if you look at the chart here, another nice gap, an igniting gap. Didn't even test it. Did a little sideways work up here. Started to get above it on Friday. So I would say above this 213.06. This could continue to the upside. Not bad.
All right, well, coming up, we're going to take a look at energy stocks that could get some attention. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms. I'm Evan Lazarus, Chief Knowledge.
We're back and talking about energy stocks that could get some attention this week, starting with the OIH.
Yes, this group actually is a little bit more of a laggard group than the last segment that we had. We were looking at it last Thursday, looking at the OAHs around this, what was it, 75? Yes, sorry, 45 area. If you look, it perked up on Friday. This was your move. This is when it broke this descending channel right here on a gap, sideways action, poked its head up, I would say above 45-ish. You got to really look at the weekly chart to see why it's important. And above the weekly resistance area, this could start getting much better flows. So with that said, this is something to look at if you're looking for tight patterns. Some would also say you have a little bit of a inverse head and shoulders pattern here. Not exactly, but you could say it, and I'll say it right now. And this could be your big time neckline. So above 45 and holding above it. Next real spot could be 48 plus. So some of these stocks could actually go within this group.
And we could see some attention paid to Anadarko this week after it resumed well after the recent pullback, and we could get a breakout there. Above what level, maybe? Yeah,
this one's actually tight, and if the OH is going to go, you need some leadership. You look at APC, look at the chart, and this chart looks good. Woke up on Friday, not very extended at all, just coming out of this, breaking above this longer-term resistance. So it can continue above 90.46, and that's worthy of a trade this week. And
Marathon Oil just saw a big move, but is now pushing into major resistance. So what kind of setup do you see here?
This one is helping lead the group. It's already at highs. So at this point, I'm looking at the chart, and it's hard to enter now. There's been some selective entries. There was your lower level entry when it went below, came back above the 200-day. Then as it broke, this sort of descending trend line here, and then recently, Friday, and now it looks like it can continue. But so again, this type of pattern is what you're seeing across the board. The 8-day moving average supporting a big move, breaking above highs. So it's not tight, but I guess above Friday's high, it could continue. Just I wouldn't chase it with 2 hands.
Yes, and what about ConocoPhillips? Broke out of the ascending channel recently and is flagging above the 8-day.
Yes, it is, and it looks ready to go. This one actually has at least been here a few more days. This one, has been here for almost 2 weeks, so maybe you get a day 2 versus something like that's been up for like 8 days, consolidated, now is looking to break out again. So above this 63, 31-ish, it could continue. Let me take a quick look at the weekly chart, see how it looks there. On the weekly chart, just back up to prior resistance. Flagging. It might take another few days here, but doesn't look like many things are waiting for a consolidation.
All right, time for some quick hits. Let's talk Apple, which continued to fail at the 440 level, still getting pressure from the short-term moving averages. What are the levels to watch in Apple right now?
This one left the A-list that we talked about when it broke below, I think, what was it, 450.50, and you look at the chart real quickly here. I am not enamored with it. I went home with it Thursday, gapped up on Friday, and Tim Cook's talk that he wanted Congress to change their rules, blah, blah, blah. P.S., this is when it broke above 420 and gave us a nice move that wound up meeting resistance right around this 465. So at this point, it's still lagging. There's only very, very select few trades here. So I'm coming in today. I'm not really that focused on it at all. Here's your resistance. I guess if it were to pop back above here, maybe it starts acting better. We did talk about perhaps this inverted head and shoulders pattern, okay, where here's your head, there's your left shoulder, this is the head right here. And sometimes a right shoulder takes time to develop, but in order for this to be a true right shoulder, it's going to have to hold this recent 419 area, and then at some point, maybe, there's your neckline. But at this point, I think that's a reach, so we'll see. This stock has not been the place to be.
All right, how about BIDU trying to reclaim its 100-day after finding support along the 8-day? Above what level might it pick up momentum?
I think so many people are looking for different names, so they're looking for quality or stocks that used to be quality, and this is setting up. This is one of those laggard type trades that could change, and it has changed somewhat. If you look at the pattern here, something that's going to be on my game plan this week, above 95.50, you could see a move back to $100, and China is acting a bit better. Google's been on fire, so maybe this one gets a little attention as it's been so battered and bruised, and this almost could be looked at as a value play down here. And it's gotten back to the 200-day a few different times, so I'm actually going to look at this today.
All right, and Tesla, one of the big exciting names we're seeing all over the headlines right now. What are the levels you're watching there?
This one, had the secondary, got all the headlines, and it acted well on it. The question is, when will it or can it get above recent highs? So for me, I'm going to give it some time here. We caught that cute short. If you look at the chart, remember this exhaustion top came in, held the 8-day moving average when it went below 80, and then gapped up, and now it's got a little multi-day range here. I think traders, including me, if this can get above 94.95 and hold above it for like 30 minutes, those 25 million shares that are short could start getting a little worried. And then if it were to close above 97.12, I don't think this 100 mark will be much of a problem at all, and it could go as high as 110, 120.
Look at that chart. Isn't that crazy?
Action.
Yeah. Well,
ACT.
let's talk Amazon, which outperformed other tech names on Friday, gaining 2.2%. How much room to the upside do you think it still has?
This one is always frustrating to me. For some reason, whenever it looks its best, it's a sell. Whenever it looks its worst, it's a buy. But the overall channel now, if I take my own frustration away from the stock, is looking very bullish. They've had 2 quarters where they weren't great, and the street didn't, let it fall apart. There's talk that at some point the margins are going to get better, and then their earnings are going to get explosive, and then the PE will come down. Whatever. You look at the chart here, you will see that what I see is a multi-month range. Okay, this was your high here where it couldn't get through. You remember that's what put it somewhat in the penalty box. So here is your pivot. We talked pivots. Here's a pivot to know, and this comes in around 284. But I don't want to see you wait till then. Overall, here's your descending channel where it broke a little bit below, but couldn't stay below the 200-day for more than a few sessions. Now it's holding higher. I would say if you have some room, and the market wants to extend, they're going to be looking for something that hasn't gone yet. And Amazon hasn't gone yet. You have 270 maybe would be one entry, and then if it can close above 275-ish, then the last pivot is 280, and then from there, you're talking nothing again. So at this point, it's close enough and it's repaired enough on bad news. Imagine if Amazon gets some good news.
Right, and over in retail, LULU did have an impressive move on May 9th and is flagging above its 8-day. So where might we get a breakout there?
Well, this one we talked about 77-ish is the last buyable price, besides every other time we've talked about in the past 2 years. Well, anyway, you look here, it's flagging above these highs here. It's been here for like 6-7 sessions. The market's a little flat right now. So if this were to get above 81.70 or 82, you could see another move. At this point, let's go to the weekly chart real quickly. On the weekly chart, it just broke above this key level, and look where it is. So it's hard to sink your teeth in, but on the daily chart, when you're looking for setups, this one is one of those tight setups. Kind of like you had a tight setup here before it went. Here's another tight setup. You just don't know exactly how many days it's going to take before it can get above that.
All right, so tell us, we do have Big Ben coming up on Wednesday. What will you be focusing on as you head into the first trading session of the week?
I've talked about my different hats. Today I'm wearing my trader hat. We had to switch clearing agents. I had to empty my virtual trading floor. That's why for those of you that follow me on the virtual trading floor, you see that it's flat. There's no Bank of America in there. If you've been looking at it, I think 99% of the time it's been in there since August, as along with a few others. So for that, I'm coming in flat, and I need to generate cash flow, trade the tight setups, and get involved and put on trades, take them off, and navigate it the same way as all of you. And let's try and put together, 4 or 5 good trading sessions before Memorial Day weekend, so we could all go in there, with a happy face. And as far as more macro and intermediate, we'll see what happens with Big Ben. If all of a sudden he does say something pretty stern and like giving the definitive time when he's going to go from maybe 85 billion to 40 or to whatever, and we sell off, we'll see how harsh it is. We'll see how engulfing it is, and then we'll see if it changes the more intermediate time frame, which at this point has been, heading higher, except for right now we're extended above the Bollinger Bands and away from the 8-day.
All right, we'll say thanks so much, Scott. Happy trading, everyone. Have a great Monday.